Hello, and welcome to Pro Trader Strategies Market Commentary for Thursday, February the 4th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data out today. We did have unemployment claims. Most of the numbers coming out today aren't that big of a market mover or not really widely looked at per se. Everybody's kind of waiting for the non-farm payrolls for tomorrow. But we did have preliminary non-farm productivity came in at negative 3%. Preliminary unit labor costs came in higher than expected, at 4.5%, was expected around 3.9%. Factory orders, unfortunately, slid a little bit at 2.9%, negative 2.9%, was expected negative 2.5%. And natural gas storage was a drawdown of a little less than what was expected. And it is what it is. It was pretty much in line with the natural gas orders anyway. So, moving on. Got a lot to go over. NASDAQ's been all over the place. It's been positive, negative. Now we're down in the negative territory. If you watched yesterday, late in the day, we had a rip-your-face-off rally again. It's when, there's been a pretty low volume until the very end of the day. We got some volume picking up. But as you can see, this back and forth has been really where volume has kind of been a little bit slighted for the amount of moves that we've had. So it just seems pretty vacuumish, if you will. When the market starts going down or up, it is like you're in a vacuum. When we sold off in the morning, it was just a free fall. Late in the afternoon, when we rallied, it was just a rip-your-face-off rally, meaning there was nothing in there stopping it. The reason why we call it a rip-your-face-off rally is because everybody's doing that. But anyway, moving on. So right now we have, as you can see here, E-mini NASDAQ /NQ down about 29 points, 30 points right now. Onto the E-mini S&Ps /ES. As you can see right here, we're just slightly in negative territory, down 5%, down 5 points right now. But, pretty much in line with what we've right in the middle of the range for the day. Again, here's the E-mini S&Ps /ES. If we settle above this value area right here, it is going to look like we are going to rally up to at least the point of control. So for you day traders, if it settles above there after going back down and up, it looks like a pretty bullish setup anyway. So moving on to a couple of things that I've done, several things we got to get out of the way here. This is my earnings trade, and I did the Philip Morris. I looked at I looked at Yum Brands, and I looked at, what was the other one, Clorox. But Yum Brands just wasn't looking very good for me. And I looked at Philip Morris. They've been beating on earnings for the most part. It did look like there was a bit of resistance right here, as you can tell. Probably a good place to start selling some calls in Philip Morris. But I looked at it like they've been beating earnings, and they have a tendency to really spike higher on earnings. So I didn't want to sell any calls ahead of that, especially if we get above this really strong resistance area. I thought it could really pop and get people to panic out. So I didn't want to play the short side of it, and went in there with the February, did double the market maker move for the most part. I did the February weeklies, sold the 87.5 puts for 30 cents. As you can see, I like to cover these on the open, and it opened right very close to where my puts were. So by the time I got out of them, I ended up getting out of them for 23 cents. So not a big winner. Probably could have waited later in the day and gotten a better price, but for all intents and purposes, it was. I like to cover those on the open, and when it came down and tested my strikes right on the open, I was a little bit nervous about that. All right, so moving on to, let's see, what's my next chart? Okay, so this is Tesla. Let's go to Tesla. So in Tesla, I got out of my Tesla and the Netflix. These were some shorts that I had on that were naked. These were the big margin hogs that were kind of, keeping me from doing a lot of different earnings trades. So I thought that these had kind of run their course for the most part and wanted to pair out of these. So in Tesla, I had on the March, Tesla's TSLA ticker symbol, sorry. I did the March 230 calls, and I originally sold them for $2.65 and was able to buy them back for $1.56. When I first started going to cover those, it was right at 50% of my max profit, and the market started rallying late in the day and was chasing that and Netflix. So Netflix, again, as you can see, they really rallied and came right back above what this support resistance area was yesterday. And you could probably cover them for a little bit better today. But I had on Netflix ticker symbol NFLX, and I had on the March 120 calls and originally sold them for $1.15, bought them back for 43 cents. At one point in time, it was looking pretty good. I started out trying to buy them at like 33 cents, and then the market really started popping, so I started chasing to get out of those. So covered those two trades that I've had on. Trades that I've added, Monsanto. So looking at Monsanto here, it's had a huge rally. It's probably just because some people started doing a little bit of short covering, I'm guessing, but nothing's really changed for Monsanto. And I was looking at it to if it goes above 100, I want to be out of this trade. That should act as a very serious resistance area. And this 47.5 area is actually going to act as some resistance. So all the way through that is going to be a resistance area. So I look to put on short position in Monsanto. Plus I needed to add, I took off a lot of short deltas with that Tesla and the Netflix. So I needed to put on some short deltas too. And went into the March 97.5, 100 call spread and sold them for 76 cents. So hoping to see that come back off, or at least stay in a range and stay a little bit below that area. Now on to Lennar, ticker symbol LEN. I did the March 40-38 put spread and sold them for 67 cents. And the reason why I did that is because if you look at this Lennar, we've got tweezer bottoms on here, which is a pretty strong support area. So I went in the Lennar and did the 40s, which is right here, but I want to be out if it goes much below that 39 area. I was trying to do it on the open and get the 39s, but it wasn't working for me very well. I couldn't get the width of my strike on that, so I bumped it up just a little bit. And Schlumberger, easy for me to say, SLB is the ticker symbol. I did the March 79.5 call spread and sold them for 56 cents. And if you look at this, let's see if I got this up. I'm going to do this quick and dirty just so I don't waste time, but go to the drawings, make sure I go to Fibonacci retracements, but right around here, just to get, it's not going to be exact, but for these purposes, it'll be good enough. And if you can see this is the Fibonacci retracement area. We came up and tested that, failed. So I decided to put on a short call spread in here to add some short deltas. And remember, short deltas means you're short the overall market. So to get short deltas, you could buy puts or sell calls. And I decided to go in and sell a call spread. So I did the March 79.5 call spread in there. And sold it for 56 cents. Like I said, the reason why I picked the 75 is because it's a little bit above this fib retracement area, and the 75 area right here is going to start acting as a resistance area as well as it showed support on the way down. So that's why I put that one on. And then on to CMG, Chipotle. I think most of the bad news is behind Chipotle. I think people have really puked out of this. As you can see, we've gone from 759-ish area and sold off to the 400s just over this scare that they had not too long ago, but they seem to be cleared up on that. And with Chipotle, as you can see, it has bounced up against resistance, but this is going to look as a bit of a support here as well, so the 440 area. So I decided to do the March 440, 430 put spread in there, and sold that for $2.60. So those are all the trades that I've done today. Friday's webinar, we're going to be doing it on synthetic long calls, or synthetic long stock. And the synthetic long stock is great because for people that don't have a lot of money in their account, can create a nice portfolio using these synthetic long stocks and duplicate the performance of someone who just goes out and buys stock and holds on to it. So we're going to be able to take advantage of that, but using about 50% of the margin that it would take to just go out and buy a stock outright. So that'll be a really good one. It's going to be a little bit earlier on Friday. It's going to be 1 Eastern, 11 Pacific. So you're going to have to maybe adjust your clock for that one. It's going to be a little bit earlier to get things out of the way. But that's all I got for you today. Other than if you can't take that, take it easy.